Into late 2016 or early 2017, and my gosh, the number of companies that were now coming to the firm and saying, hey, putting their hands up and saying, we want to try, we want to experiment, we want to test out what this technology is. So the conversation, the discussion, the actual application, the way they were thinking, and this is across those companies of what they were thinking that this technology can do. And the other thing that was interesting is when the conversation started, in a lot of cases, they were thinking about, well, why don't we just do this internally? Why don't we try to figure out how to use that technology within our four walls? And the real value is with blockchain is really around trading. It's around having other partners, and which for a lot of companies was difficult, but that's where the conversation started to head towards. Along that same similar time, a few years ago, Klaus Martin, who's up here, the CEO and founder of the World Economic Forum, he came out and said that blockchain is the foundational platform for the fourth industrial revolution. So let me just give you some context. So if you look at these bubbles. So in 1784, that was what they call the first industrial revolution, where we had steam and water allowing for mechanical production. And then in 1870, we saw the second generation, second industrial revolution with electricity and labor, and that you now started to see mass production. In 1969, with IT and electronics, we started to see automated production. So that brings us where we are today in the fourth industrial revolution. So the way to think about that is you have AR, you've got blockchain, you've got IoT, Internet of Things, you've got analytics, all of these different technologies fusing, melding together the physical, the digital, and the biological domains. So what does all that mean? So if we look around and we look at various industries, and let's just take the automobile industry, a lot of companies are now moving, particularly products companies, are starting to move to more of a as-a-service model. Because with these different technologies, they're able to change the way in which they're doing business. And we're seeing this in a number of different industries. Think of IoT devices, how it started off when you've got smart buildings, now you're moving to smart communities, and now to smart cities. And all of those different aspects are now coming together. So where does blockchain play in all of this? And as I said, it's part of the fourth industrial revolution. So let me just back up and give you just a quick understanding on blockchain. It is basically a distributed ledger across a network of computers that allows for a validation or consensus of a transaction, which is then recorded on the ledger, without there being any intermediary involved in that. So if we think of a transaction as a movement of value or a transfer of value or change of ownership, so the key innovation, self-validation, no intermediary, transfer of value, that's really what it is. And if we think about today and the application of blockchain across many different industries, think about what the types of transactions that we do today, whether we interface with banks or whether we work with hospitals or governments, the various transactions that we conduct, and a lot of which we don't see behind the scenes. In order for that to occur, there are a lot of middlemen. There's a lot of actors involved in those transactions. Where the implications of blockchain is a lot of that will go away because we won't need them. Because you now have a ledger being able to show and prove that that transaction is permanent and it resides on that ledger. So the blockchain itself basically is, it is a ledger that uses private and public keys for security. You have a consensus mechanism. All the transactions are transparent to all those that participate, and where there is a permanence in that transaction, a permanent record of that transaction, so it is audible. The other couple of key aspects is you'll hear the term private and public blockchain. And in the public blockchain, typically it is what we consider a permissionless. Anybody can join, and often it is the participants are anonymous. In a private blockchain or a permission blockchain, you know who the entity, you know who the entities are, you know who the individuals are. In fact, there's typically a KYC component to that. So I touched on the private blockchain. So what is actually happening in the enterprise? As I mentioned a few years back, most companies, what they were trying to do is understand really what this technology is all about. They were trying to figure out how this actually how this would be applied to their business. And what we started to see is a number of these companies have done what we call the proof of concept. Basically taking a particular use case, looking at their company, working with that technology to figure out what are the changes to their operating model, what are the changes to their business model, what does it mean to work with their various partners. So as these companies are going through that journey, they're trying to figure out how to make this work amongst many players. And that brings me to the minimal viable ecosystem. So in order for these companies to be able to go use blockchain in a trading environment, in an external environment, bringing their partners together, they need to figure out what is that value, what is that business model, what is it going to do for their trading partners, and if they're in an industry where there are regulators, how is the regulator playing in that? All of those components that you see in those bubbles up there, what are the funding sources, thinking about their infrastructure, the stakeholders, all of that are considerations as they're trying to figure out what this MVE is. And that's taking them from that proof of concept stage that I was talking to you about. So as they need to move up to pilot and production, they need to have this nailed in order for them to move forward. The other two words that you see on the slide is rules and governance. And this to me is part of the heavy lifting that all companies that are working in this space is that you need to understand that if you're trading with different partners, what actually happens if there is a dispute, if there is an exception, who holds liability, how you're onboarding your partners. Like those are all various rule sets. And you look at Visa and MasterCard, the way in which they have a number of banks that are part of the Visa network. They have a thick rule book, that every twice a year that they make changes as technology and businesses evolve. In addition to the rules, you have governance, and that governance refers to the governance of how that network, of how all the partners play together, and as well as thinking about it from the application and the technology layer. Those are the key considerations when we're thinking about an MVE. And this is really important. This is what takes time, and particularly the last 2 points there. Previous speaker, Lou, spoke about some of the use cases that he's seeing. So there are a number of use cases and applications for blockchain. These 5 that I have up here are the ones that are probably the most common and have the strongest opportunity. So asset management, it's really the cradle to grave in terms of any asset. So think of the airline industry, think of any heavy production, the production industries. So being able to actually know when you have to replace, maintain a particular asset, that's what this is all about. Supply chain's a big one, and supply chain is what you hear most of. We think about raw materials, taking that through to production, and then from production out into distribution. That full span, there's multiple processes, there are multiple intermediaries involved in that, and there's a ton of reconciliation. So there's a real attraction to what blockchain can do because a lot of that gets mitigated, and for the various people that are in that supply chain and various stakeholders, it reduces a number of processes and costs. Digital rights management is very similar to supply chain in that it is about the digital content world, where you have, think of music, think of ebooks, think of movies, where you need to, from those processes, it's about creating content, distributing content, tracking, consuming, and payments. And that's what digital rights is referring to. There's a couple other ones there. Payments, we hear a lot about payments. Obviously, that makes sense. And then there's identity. And on the identity spectrum, this is not just about, there's two aspects to identity to think about, one of which is identity of things. So in supply chain, that becomes really important, as well as in asset management and digital rights. So it's the identification of things. But there's also about, as we know, the identity, our people, our individuals, our identity. You think of all the assets that we have as individuals and that we have accumulated, beyond our, just beyond our bank accounts. You think of your education and any other, your health records, whatever that belongs to you, the individual, is tied to you and is tied to your identity. There's been a lot of companies that have been making, and this is really, identity is a holy grail, I believe, in blockchain. There's a lot of companies that have been trying to develop solutions around that. Later today, you'll hear one of my colleagues speak about biometrics and the advancement in biometrics around this to improve upon what we call the KYC. So just a quick example to express this further. Think of today the auto industry. And in the auto industry, you have, every automobile has a vehicle identification number, a VIN. That VIN is tokenized onto a blockchain. So now you've got a digital representation of that car. So you've got a massive number of cars coming off the factory line, going to a distributor, going to a dealer, out to us as individuals, and then into a secondary market. Every single time those transactions are occurring, that VIN is moving, and there's a change of ownership. That change of ownership is shown onto a blockchain. And think of the downstream activities that are associated with that. Think of what happens from the banks, because the banks are involved in all of those various transactions. Insurance companies, again, they're involved in all those transactions. Think about when that car gets into an accident and all of the processes that are involved to bring that car back and back onto the road. And from the police records to the insurance adjusters to the auto shop, all of that is, again, tied back to the VIN. So that VIN, that one unique identifier, the identity of things, is crucial in that process. So that's just to give you an example of what we're referring to here. So I've talked a lot about the enterprise space. And now when we look at the early stage companies. So we're going to hear a lot about this today and with different companies. But on the emerging side, what's really important is the way in which they think about blockchain, and they're the ones that are pushing the envelope and being innovators around this technology. And I think that, I talked about public blockchains, there's public and private that I mentioned a bit, initially. Public blockchains is really where the innovation is, less so than I think even in the private space. And so it's these companies that are the ones that are figuring out all those the use cases that I just spoke about the previous slide. There's a lot of these companies that are trying to address that. And that is what drives and will continue to drive and help with the exponential, we talked about the exponential change. So there is a symbiotic relationship between the enterprise and the startup companies. Because the enterprise basically, and I've seen this many times, the enterprise allows to basically expand and scale, bring that into production. Today, when I look at on the enterprise space, there are I actually think that there's really no company that's out truly in full production. I say that Ripple is one of the few that I've seen that have a number of banks and that they are doing transactions. It's getting close. They're still working on a number of different banks globally, but that is the right direction. But they got there, that network that we're referring to, got there through a company like Ripple, because they thought of what if? And interestingly enough, when Ripple got started, they weren't even thinking about cross-border money movement. They weren't exactly sure where, they had different use cases in which they can apply their technology. And they decided that settlement of funds was going to be critical for the banking industry. So it's the combination of the two that allows for the changes that we're going to see and we continue to see in the marketplace today. And we'll continue to see more of this. So in closing, just thinking about accelerating your MVE. So when I refer to this, it's when you think about what I just said around the minimal viable ecosystem. As emerging companies, as they're thinking about their solution and going into the market, who are their partners, what is that value proposition? All of that needs to continually be buttoned down, and that changes over time depending on as the market is moving forward. But in addition, in order for companies to get to the MVE, they are going out, we're talking about in a lot of this conference is around the token offering, the ICO. And in order to get to that, companies need to be thinking about their KYC, their AML, because they need to know exactly who is investing in their token. They need to know how they're going, what will that capital formation look like. And lastly, knowing that the token is really a security. So over the course of the next 2 days, I know there's a lot of conversations around this. Blockchain really is in its early stages. And we all have an opportunity to shape that, to shape the transformation, because with this technology, as the World Economic Forum has already stated, it is a foundational platform. It's not going away. We can see a lot that's happening on the capital formation side. And so I hope and encourage all of you to participate, because we are early, and there's a lot more to be done. So thank you very much.